Hello and welcome to Macro Mondays presented by the Goxstein News Network. I'm your host, Landy, and today is September 1st, 2025, and we're looking at Bitcoin on the monthly, and we are on the index chart today. Now, I will take a look at Ethereum and Solana as well a little bit later, and we're going to dig into kind of where Bitcoin is on the weekly and daily, but I did want to start with the monthly here. A lot is being made about kind of end of cycle kind of talk. Q4 into Q1 is the top end at $124,500 to $125, depending on your chart. Maybe, but let's look at a few things that are going on relative to the monthly time frame. And the very first thing that I kind of want to point out here is that there's been a few times already this cycle that many have thought that the top might be in, and there's valid reasons for why, technically. And Bitcoin just keeps chugging along. And one of the first things that I kind of wanted to point out here is that, I use a triple Bollinger Band set, and it's really just to measure volatility. And it helps to identify the breakouts and how long something is compressing, in this case, Bitcoin. And we're looking at the early days when we finally got a 20-period moving average that was able to finally print a read here back in 2011. We were already, expanding up, right? So the very early days from the 09 launch to the 2011 high really resulted in a big drawdown once we did see a bearish candle here. This wasn't an inverted hammer or a hammer candle of any kind. It was a little bit of a hammer for some people. It was just a bearish candle. Once the low was dropped, we did see quite a bit of time sideways and down. Some would refer to this as the first bear market, but structurally, it was just a higher low. And then we saw that once the low was in October of 2011, after putting in the high of June, we did get, 1, 2, 3, 4, 5 down months. And then it was a rocket ship right back to the upside and into November of 2013. And then, of course, we saw the 14 into 15 bear market double bottom here. And one of the things that I wanted to note here was after we had, the high volatility environment kind of cool down, we got a compression on our bands here. Now this is an upper first, second, and third, and a lower first, second, and third. And you'll see that only the lower second was able to be populated on the extremes to the downside here. But we saw compression. And the easiest way to tell that is the gray area here is pinching together. That's one standard deviation away from the 20 simple to the downside on the bottom here. Keep snapping. I have the magnet turned on. Let me turn that off. And then we got expansion up into a new high, and then compression again, and then re-expansion, and then compression. So we, out of the 15 into 16 time frame, we saw the expansion kick off in June of 16, and then last on a rally all the way until 2017. In January of 2018, we did get a bearish candle. And then, of course, our bottom here knocked up against the close open all-time high structure here in 2019, but still in the context of a compression. Resolved that compression to the upside. Bitcoin got volatility expansion into 2021. A little bit of a mean reversion. Top out at the upper second. Perfect hit of the upper second at $69,000. Almost 70 on the index here, I believe. I forget what the actual high was there. Yeah, it was $69,000. Now I had, if many of you may remember, for those that have been following me on X for a little while, when I started posting about this kind of back in August, the higher low, and then the targets at around $68,000 to $70,000, just because of where the upper second was. Now, for the first time ever, we actually came down and hit the lower second and reclaimed a prior bear market high. A prior bull market high in the bear market. And then we got a little bit of downside expansion, mean reversion, higher low structure, and then upside expansion. And then we're back in compression again. And the reason that I point this out is because there's really two ways that this is going to go. And I want to call out a few things here on this monthly chart. First will be the compression to expansion. The only way that we're going to get downside expansion is if we see Bitcoin mean revert back to the basis, drop the last higher low, fail on any lower high, with any kind of a lower high market structure break, and then a reversal setup, or swing the highs or put in a lower high and then break the low, whatever that would look like, and then start getting expansion away from the basis towards the lower first, and then from the lower first to the lower second, then possibly get that expansion of the lower second, right? We did see that coming into the highs, we were back in a compression, but we didn't even see the lower second or lower third anywhere on the screen here after putting in the top here. But we had a lot of other signals, that were going off at the time telling us that this was likely going to be the high. One, it was the failure to close above the $65,000 area. And then followed that up with all kinds of momentum divergences and RSI divergences. There was also, on chain. We saw a lot of on chain signals as well at the time that were telling us like, hey, this is probably the end of this. And if it could save itself with another higher low around the basis, that's great, but it never was able to set the low and a close, reversed right into a lower high, got our bear market lower high, and then boom, down to that lower second. Went sideways, pushed down again, and really just got its first real downside expansion, which is why we saw kind of a different setup coming into this bull market. Off the higher low during the mean reversion, you see that we got the expansion to the downside, and then we got the bands pinching back together as Bitcoin mean reverted back to the basis here, which is just a 20 simple moving average, higher low, and then start getting expansion to the upside. You see that by the lower third dropping off the screen, the lower second as well. But it didn't really kick off like full on expansion, the volatility expansion like we had seen in cycles past. Did close above the prior all-time high. Nice higher low structure, close above the prior all-time high. Now, this was a bearish hammer back in December. Now, it wasn't a full hammer, wasn't as ugly and as clean as the hammer that we have here, the inverted hammer that we have here. But this was also like, if we close below it, highs in, then we looked for structure. If we break the last higher low at around that, $59,000, and then drop that low at the $49,000 area, very likely we're going to see, a pop back up and then bear market, right? But we didn't get that. Instead, it was just another higher low. Now, I will say that this time around, what we see is a compression. And realistically, there's, the scenario of drop the low, last higher low, especially on a close. That wouldn't look good, but it wouldn't be kind of the death knell. That would be really if we start dropping the $74,000 actual swing low here, that retest of this high over here. If we drop that, then it does increase the likelihood, of course, being in the bearish half of the bands, that there would be a lower high as it relates to this most recent high. And then we could look for further compression and then downside expansion. But realistically, it's just not there yet. It's too early to call, even if some might think that it's right. It's a little too early for that. I am a confirmation trader. Now, of course, we've been talking about, 123 and 125. I've been talking about that for quite some time. And we did hit that. There is some areas of interest above 128 to 130, a big 1414 off of a bear market, off of a bull to bear market fib extension. Even a local extension here. We've got, we can even just pull those real quick here just to get them on the board. That is right here at the 1414. You can also see upper first is lined up with a 1272 around 103.5 or just above 103.6. But we have a confluent area overhead. Why was I looking for some of the areas that I've been looking for, like 112, upper second standard deviation? It was 123 on the weekly and the 125 on the weekly. We had confluence between the weekly and monthly at the time at 112. And it's been really good at tracking the highs, that second standard deviation to the upside. And, one of the things that that could also happen is, this comes down. It's not even a confirmed high in the monthly. Now, if we do trade and drop the 107.5 or 107.4 area on this monthly, this would be another high on a close. And then we just have to pay attention to that low around that 80, 82.5, 83 to that 74, 400 area. That'd be the structural break area. But the other option is re-expansion to the upside. Where would that happen? That would happen on closes, especially higher term time frame closes, but closes above 124.5, 125 area, and then starting to push on to 128 to 130. Closing above there and the upper second standard deviation would kick off expansion to the next big area, especially passing some of the major fib levels. Now, the confluent fib level here is 128 to 130. Now, on it's much cleaner on spot price, but if we also take the last confirmed high to confirmed higher low, you'll see that we get that same 1414 on a fib extension. Now, I know that Elliott Wave and Gann technicians are going to hate me for this, but this is a tried and true method when comparing areas for confluence, and that is another 1414 off of the last higher high to higher low confirmed closing swing structures. So a swing high and a swing low with a closing high and a closing higher low. In this case, 128 to 130 is a confluent area from the prior macro structure, high to low. And then, of course, just above there, we have the 1618 at 138 to 140, and then 1786 to 148, basically to 150, and then so on and so forth to the upside. That would be the other option for price here. Now, I will say that, and the macro is still bullish. And I know that there's a lot of people exercising caution. And there's a very good reason why, because there's a lot of bearish signals building. And there's a lot of uncertainty in what the Fed is going to do and what the administration is going to do in terms of economic policy, right? So that is, there is warranted caution. We also see that there's a lot of cash in markets right now. And that cash, while some is parked on the sidelines here, a lot of it has been flooded into the markets, whether it's for secondary treasuries or in equities or in crypto. There's a lot of cash in markets. There's like, for instance, the reverse repo sell-off early August. Like there's barely anything in there, right? What happens if they don't cut, for instance, in September? Well, the market is betting on them cutting, and we'll even see kind of where the market stands tomorrow when we get the 13 and 26 week auctions for treasuries. And, if they're still pricing in, a cut, we'll see it there. And if there is no cut, then there's going to be a massive readjustment of liquidity in the market. So that's typically bearish, right? But what does that mean for kind of Q4 to Q1? We're still right on track. But one of the biggest things that I want to point out here is that, we're still seeing, like, for instance, Bitcoin in a very bullish position, right? And until we see the actual macro time frame shift in terms of trend, like a trend break below the last higher low, for instance, or if it puts in a swing higher low up here and then we see it break a swing higher low and then start to swing into higher, trend break into lower high structure, that's something that we can start looking at as, okay, bear market's on. It would still look like a consolidation anywhere above the basis band though. And really that's an area that's, right around $84,000 to $85,000 right now. It's above the prior higher low close. And there's not too much that I'm concerned about until I start seeing structure break. And where would we see structure break? Realistically, we'll see it on the weeklies before we see it like come to fruition on the monthly. So we'd likely see sometimes the confluence of the same things. If the weekly was going to do a structure break to the downside, we're likely looking at that follow through with the monthly. But in this case, we're still in the early stages of just coming off of a bearish candle. And of course, the high side structure being at around a close of 115.8, which is right around an important daily. One of the big things, though, that want to caution people about is that no matter what, the quarterly is bullish, right? So we're on the index here. We've got where bands started to populate. We've got the expansion to the upside, the compression. When you start seeing, it's very easy to see with the lower first coming back up, the compression, re-expansion, it drops off the map. And now we have the lower first indicating that, we have gotten some closes above the upper second, but it's been a close above and then a close below, a close above, close below. And actually right now, quarterly is showing that, hey, it's still hanging out above the upper second, but if it closes below, this is further compression on the quarterly time frame. And there's really only one way for this to break out for Bitcoin. And I'm sorry, you're not going to see expansion to the downside. That expansion will go to the upside. So this is in a macro compression on the quarterly time frame. I've been talking about this for quite a long time. We still have not seen expansion on the quarterly. And we can have entire bearish periods within the confines of the structure here on the quarterly, while it still remains bullish and still in a compressive phase, which does mean when it kicks off expansion to the upside in earnest, it's going to be big, like very big. And it will take a long time because it is a quarterly time frame. So it takes a long time for this to play out. But we still haven't seen it kick off. And you can see that, basis band is the bias for this to stay in the bullish half, and that's all the way down at 51.6 right now. So, you can have entire bearish periods on the quarterly that are still macro bullish, and what people like myself are looking at is like, this is a long-term bullish setup for very, very high prices once this actually starts kicking off. When will it kick off? We don't know. But the longer that we see it trading above the upper second, and this is not a nice looking candle, but neither was the one from the end of last year into the first quarter of this year. But realistically, when this actually does kick off, it's going to be on close over close price action above the upper second that then starts to expand above that upper third, which is right around 135. This candle turns green. It's going to be around that fib level that I was looking at, 138 to 140. And then we'd see quarterly expansion, but you'd need to see close over close price momentum above there, which would target much higher prices, the 140, 150, so on and so forth, up to another major level at like 173 to 175. But it does pay to exercise caution, and don't. I would be cautious about taking the knives out for anyone that's talking about the bearishness of the structure right now after last month's closure, because it is a bearish closure. But I would caution people, we had this same thing occur back in December coming into January. So, it's not over until it's over, and Bitcoin can grind longer than a lot of people can stay, patient. And that brings me to the weekly. Here's the early indicator. We're going to turn on the actual local support and resistance zones of interest here in a moment, but we did see that the open occurred below the basis band now on the weekly. That is a warning that we're playing in the bearish half of the bands, even finding that as resistance right now, right around 109. Closing above 109, we start looking back to that 115.7 to 116 area by the upper first. Anywhere above there, be cautious around 123 by the upper second. This is expansion back into compression on the way up. The upper first, second, and third will typically act as lower term time frame resistances, just like on the way down during a compression phase like this. The lower first, second, and third will act as support areas. Now, if we start to breach below them, they act as additional targets, and it's not really until we see a close below the lower second, for instance, which would be below $94,000 to $95,000, that we would see expansion to the downside, or close over close price momentum above 123. We'd see, of course, expansion up to the all-time high at 124.5 to $125,000, and then close over close above there on the daily that leads into the weekly would be, where we start to look to the upper third, somewhere around that 128 to 130. Now, what bulls need to pay attention to on the weekly is this is a complex high, and it is a swing. It is a swing trend break, right? So this was the higher low, the higher high, and a lower low as it relates to the last higher low on a swing basis, right? So we do have a trend break. It's all about the next high. So wherever this bounces from, because this is a complex closing high, this is not a singular, this is not a higher low, lower high on a close basis. It is a complex closing high. This is now one structure. And in this case, we do have some that are going to say, no, no, no. I'm going to say, yes, yes, yes. It is a complex closing high. Some are going to be very nitpicky about the closes here. This is one singular closing high in my book, but it is a swing trend break to the downside. So the uptrend is broken on a swing basis, and you have to be careful of the next lower high swing or lower high close. That would be your reversal setup. And that's what many are going to be looking for on bounces. So understand that. But what do the bulls have to be aware of? That is the 101 to the 98,225. If that breaks on a close from here, then that is a closing structural break. That would also put price below the lower first and headed towards that lower second. And then you really have to be aware of bounces, especially coming into a compression like this, that result in lower highs. And then that potentially manifesting in further downside on the monthly. September is going to be a very important month to pay attention to price action and economic data, especially as we head into the 17th for the rate decision. I said this on Friday, and I've maintained this all the way through. I think it's a 50-50 based on the data that we're getting in. I know the market is much more bullish on cuts, and I've told you that the 13 and 26-week auctions have been tentatively pricing in a 25 basis point cut for September. But that doesn't mean that he's going to cut in September, all right? So understand that when the vote goes through, we're going to know. And that's only when we're going to know, right? The rest is speculation. And we've seen that prediction markets have been incorrect in the past on this. I think that it will get a better idea with the rest of this week's economic data coming out. As we do have PMI data, we've got JOLTS data, we've got unemployment data, all kinds of stuff. So we've got non-farm payroll. There's a lot of data coming out. And then, of course, then the following week, we've got all the CPI data and PPI data and all that kind of stuff. So it's going to be interesting. It's going to be an interesting first 2 weeks headed into that meeting. And I still maintain that if they don't cut in September, I think that there's going to be a cut in Q4. So I think we at least get one cut. And we just have to really monitor where things are headed, because the market is a little shaky right now and kind of on its heels waiting, right, in terms of data. Now, we have had new highs in SPY and Dow, NASDAQ pushing back to it, all that good stuff. Again, there's a lot of cash in the markets. And if we don't see a cut, we likely see that going right back to the reverse repo and getting parked on the sidelines again until there is some decisions. Now, that's just speculation on my part. But yeah, let's go ahead and head down to the daily and start looking at kind of what has played out so far. We did get a beautiful bounce so far off of the area just below the weekly in lower term timeframes. So we've got a perfect tag of where the move originated, the move to new all-time highs, that 108 to 107.2 area, 107.2 to 3. We did see that Bitcoin has put a couple daily candles down here. It's still being governed right around a daily level, which is the internal structure. Some of the dailies over here inside of this bigger weekly at 109 to 112. The bulls need to see a recovery above 112 to go and try and break that last lower high at 113.5. That would also put them above the basis. Then we need to see structure being built from there, no matter how high it goes. Even if it was the 114.750 to 115.7, start to push into the bottom side of this range up here between that, 115.7, 116 to that 117.8 to 118. That would be the next area to recover. But right now, the bulls got work to do. They've got a weekly and a couple of dailies governing overhead price and confluent areas of interest for volatility as well. You can also see that if we did get a drop of the 107.2 area, lower second is a little bit of a front run of this 104 to 105 daily structure, which was another higher low. Now this is going to be pretty important. Excuse me. If we did see lower second, breached below in lower term time frames for the position of it on the daily as it stands right now. And this could change coming into the Tuesday session, but as it stands right now, probably be a wick through to that area. Bulls just need to hold in lower term time frames 109, really recover this daily around 109.5 to that 110, 111 area, 110.8 to 111 area to really push 112. Need to see closures above there to give the Bulls a shot at that 113.480. But so far, so good. Bulls did let it drop out of the weekly and tag the origination of the move before new all-time highs were put in. And realistically, if they can hold up in this area and recover, we'll find out a lot about what they got in them with a lot of this downtrend. Really, it's been a pretty nasty downtrend for the Bulls in this regard, especially losing key areas and getting perfect bearish retests in some of these areas, and then dropping very important areas that need to be flipped. They'd have to really prove themselves on any retest back down into this area. So if we saw a trend break back to the upside above 113.5, we need to see higher low, equal low structures as it relates to this. Where would we see a low set? Technically, we would see a low set on any closes. And in fact, yeah, it did avoid it. Any closes above around 109.5 here. But realistically, I want to see the low set above yesterday's high now at almost 109.9 to 110. Really start recovering that daily area of interest and start pushing that weekly. That's where I'd be looking at this as, this is the most recent lower low set on a close. The swing low is now set. If it's dropped, we're testing that lower second down into 105, possibly even 104. If it is dropped, I do look at the 1272 at 103, and a half to 103.7 or so, kind of bracketing this 1272 as an area of interest. But realistically, the big area to watch is that 101 to 98.225. Bulls want to see that hold up. They don't want to see it break. That would start to look really bearish on longer term time frames, especially the weekly. And, what is the potential for the Bulls right now? Is there any kind of bullish divergence that we could pull off of this? Nope. Momentum still headed down on closes below 110, 300 essentially. Is the 12 hour showing anything? Yeah, a little bit of upside, but these have been failing quite a bit. 103.8. Need to see follow through with this, and same areas for setting a low. We are getting a bunch of bullish divergences, but it's all within a consolidation right up against resistance. So there's nothing really, fun here for the Bulls just yet. Same goes for, the Bulls even on the 4 hour time frame. Looks like garbage. Need to get above that same area around 110, 109.9 to 110. And you can see the 4 hour is going to give us a bit of a clue. You can see it's running both sides of the bands right now, but close over close price momentum above the upper second right up against this daily here would be expansion back up to that 109.9 to 110. If it starts to close above there, we would get expansion further up, somewhere around the deep 110 to 111 areas, possibly even 112. And that would be, the next expansive move on the 4 hour. Any closes back below the 108 level, look right back to the 107.2 area, 107.2 to 3. If we do see a breakdown from there, then the 4 hour is going to be expansion down into that 105, possibly 104 to the downside here. And, there's fairly low liquidity right now. We'll find out pre-market, I think, some setups for some moves going into the Tuesday session now. But not too much else to talk about there. Bulls still have an opportunity here. Maybe even an opportunity right off of this level. They have been trying to defend it, but it's going, Friday through the weekend. Now the Tuesday session's open, and I think that's when we're going to start seeing the etchings of the real move begin to show itself, whether it's going to be setting a low and trying back to the upside for a trend break, or whether it's going to be continuation to the downside. I think that's when we start to see the setup emerge. Obviously, with the professionals back in the office. Let's go ahead and take a look at Ethereum real quick here. Ethereum's been holding up okay. We are in a bit of a downtrending structure right now, with another lower high right around the 4,500 area. If we do see this break, then, I would be looking right back to the 46, 46.30 by the upper first. And if they can start putting in some higher lows or push up even to the prior highs up here by the upper second, right around 48 to the 5K level, we need to see closes above there, get that expansion to the upside. Otherwise, drop the low from yesterday would put Ethereum below the lower first, right around 4250 to the low at 4209. Then we're looking at expansion down right around 4100 to 4K by this 888. If that is dropped, we're looking 3930 to 3900 essentially. Anywhere below there, 3750 to that 3600 area is going to be fair game on expansion. But this is a consolidation, and much as I said, when we saw the nice higher low structure emerge off of the basis band here, I was looking around that $5,000 area. By the upper second, we came up just shy of it. But that I had mentioned, with bands expanded like this, I want to see compression before really trying to break out above the all-time high and higher, go on a run. And we're starting to see that start to come to fruition. But the danger is that the bulls drop the ball here and let it expand to the downside. They need to hold this overall area. And as long as it's really above 3,900 to 3,930 down here, I would say that the bulls still have a clear shot to try and just consolidate and then make another run for the highs and try to push on expansion. But if that is dropped, then it's going to be danger, danger, danger for the bulls for Ethereum. When looking at Solana's looking all right here, right around the basis band in the strong half. They want to set a higher low here, to be quite honest. If they do drop the basis band, look right to that 190. Anywhere below there, right to the lower first. Right where that last higher low is, that's caution. That's 185. Anywhere below there, structure breaks. Probably headed down to 180, maybe even 175 to hit the bottom side here. And you can see that below there would be expansion, probably a price replace band right down by the lower third at the 165, 166 level. But Solana is also in like a much stronger position, just like Ethereum right now. And realistically, if you want to see an alt season or a sector by sector alt season, as I've termed it, you want to see, Ethereum and Solana and all of the other majors for alts pulling their weight at the same time and heading up towards all-time highs and higher to really kick off that alt season, altcoin run. And I still think it's going to go sector by sector. I think they're all going to take turns, but you want to see them generally in a strong position, and they are at the moment. And you probably want some help from Bitcoin. So if you're in altcoins and you want to see Bitcoin, recovering, setting a low, and then breaking the downtrend. I will caution, no matter how high this pumps from here, the shorts have cover all the way to this upper second area, right around 120 to 121. They got plenty of cover. You're not going to shake them out. So you might get smaller liquidations. Maybe they'll let some go and help on the buybacks and stuff, but they can reposition anywhere and still have cover above this 120 to 121. Above there, they lose their cover and have to reposition heavily and likely let a lot of that go and let price run, which would be where we could potentially see price running back to the all-time highs and higher. But shorters do have a lot of cover after this drawdown. So got to push them out. If you're going to squeeze them out, bulls, you got to push it up above 121. I do say that as somebody that's short this market right now. So I am looking for something outside of long scalps, which I have been scalping long, but I'm looking for a structural change at minimum, like on a 4 hour, that's actually a decent structural change. We could see that. And obviously after a structural change, I'd like to take the swing off the higher low from there. We'll see if that works out on the long side. Otherwise, there's no reason to let go of shorts right now. Tons of longs in the market, and it's long pay short. So you're just banking all day, just holding on to a position. That needs to change if we want to see price go up. So I'm going to leave you with that. I'll talk to you again on Wednesday. You have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. With all of that being said, Landy out. Talk to you on Wednesday and then again on Friday. Go ahead and like and share the video, and I do appreciate it. Take care.